Yo, what is up, guys? Ladies and gentlemen, I hope you're well. Hope you had a fantastic weekend because Friday's close was pretty terrible, but today, geez, I mean, if you live under a rock and you don't know what's going on in the markets, I mean, come on, guys. Today was a pretty bloody day. And what caused that? I mean, there's a lot of theories, a lot of people speculating, and you just never know. You just have to take everything with a grain of salt and understand your own theories, understand your own interpretations. But what's most important is that your analysis for your price action and your charts and your stop losses and your risk management is all on point, because that's all on you if you fail to stick to your plans and discipline. All right, guys. So before we dive into the video, let me brainwash you a bit, as I usually do. If you're new to the channel, thank you so much. Welcome. Subscribe. Okay, give me a thumbs up if you are enjoying these videos, or if you enjoy the content that I put out, and also hit that bell notification so you'll be notified when I upload these videos every single day. All right, and if you want to get your hands on free content for using Elliott Wave for chart analysis, join Trending Waves. Of course, it's limited time only. And you know, the link to the Discord group will be pinned down in the comment section. All right, guys. So with that being said, let's dive into the analysis and see what's going on right now. Because last week we were talking about the S&P and the Qs holding the 50-day simple moving average as support. Okay, we actually gapped down, and you haven't seen a gap below the 50-day simple moving average at all. Okay, since our COVID lows. All right, we've seen it drop mainly from September 2nd to September 22nd, and then we went up a little bit, and then we just hold off again to the October lows. And ever since then, we've been rallying, holding the 50-day. Now we actually broke below it. Okay, and I got a lot of heat last week and the week before when I was pointing out that there was a possibility that the markets may have already reached the top. And okay, I mean, fine, it's my interpretation. And sure enough, by allowing myself to have an alternate view of my interpretation, it gave me the opportunity to not get liquidated. It's plain and simple. I was patient. My invalidated levels were triggered. My stop losses, not stop losses, but my sort of confirmation. There you go. That's the word I was looking for. The confirmation levels were triggered, and thus giving me, hey, Camilo, we're gonna head lower. We can't be opening up new long positions until we get clarity. That's exactly what my analysis was telling me. So I encourage you guys to be patient. Also, I encourage you guys to join Trending Way so you see how we trade there and how we analyze these markets, so that we don't get liquidated. All right. So back to the markets, back to the chart. So where is this the top? Is this an all-out crash? I mean, I'm not calling it a crash. I'll call it a correction. At some point, we have to correct this whole move. It's not healthy. We can just keep on going up. I mean, I wish, but at some point, we have to see a drop. Now, this drop is not too significant just yet, right? And what I say, I mean, of course it hurt, right? But it's only been about roughly 5.5%, but we closed just shy of 5% from the top, 4.38. If we look at this drop here, okay, this was a drop of 11, 10%, 10 and a half. Okay, we got another drop here of about 9, 10%. So we haven't seen much of a drop just yet, ever since September the 2nd to September 23rd lows. Okay, so I think it's time. I think it's time for a pullback. And so let's turn on the labels and see where we could potentially head towards. Now, this is a placeholder, guys, because if this is the top in the wave 1 and primary degree, then as I've been mentioning to you guys, a 23.6 to a 38.2% retracement of this entire wave advance is not out of the question. Now you may be wondering, oh my God, why I just bought the top? I guess it's not, I get stuck with words because you hold it to your own interpretation and to your own analysis, but this to me can serve as a great buy opportunity, because if this is the second wave, we just completed wave 1, wave 2, the next one is the third wave, so that's where the real money is gonna be made long term. Okay, so this isn't going to be day trading opportunity here and there. This is going to be a dip buy opportunity, a massive dip buy opportunity to take us on the third wave. I mean, we'll be carrying ourselves over to wow. I'm actually pretty excited if that actually does unfold. But till now we just got to play the chart and see what happens. So reviewing the chart here, we went up in 1, down in 2, 1, 2. Okay, from the October lows, we started holding the 50-day simple moving average as support. Now, if I take you down to the 1 hour time frame, let's dissect what's going on here. Okay, and what we're looking for. So from the primary degree wave 1 of intermediate wave degree 5, we went down in 1, up in 2, down in 3. We're looking now for a 3-wave pullback to retrace this entire move down. Okay, and what are our invalidation levels, and what would be our trigger to say, okay, maybe this is not the crash that, or the correction rather, sorry, I won't use that word again. Maybe this is not the correction that everybody's looking for. Maybe this was just a dip and then we're heading on higher. So we'll look at that alternate count in just a second, but for now we're going to work with this one. So we went down to the third wave. What does that represent of this whole advance? So we take a retracement tool, or an extension rather, right, from the high of wave 1, sorry, from the start of wave 1 to the low of wave 1 to the high here. Okay, and then we turn on the 100% and the 1618 and even the 200 and see where those levels were. So SPY intraday today finished between the 1618 and the 200% extension of wave 1 versus wave 2. That's pretty deep. That's aggressive. Normally we see a 100% of wave 1, but this time we went deeper into the 1618, even the 200. So we were sandwiched between those two levels. So our invalidation levels to discount this whole decline, or this wave count here, is that we don't want price action to break above 443.27, the low of wave 1. If wave 4 goes beyond that territory, then potentially this wave count is invalid, but we can still be within an expanding triangle, but we'll take it one wave at a time. So we obviously saw the bounce today because on every time frame you saw that the RSI was extremely oversold. I mean, on the lower time frames. Right now, if we look at the 1 hour time frame, I mean, look, today we were pretty oversold on the RSI, so that was a pretty given opportunity for a dip buyer, and sure enough, a lot of people took advantage of it and we had on higher. So what does the alternate count look like if this is invalidated? So taking you over to the SPY and our alternate count, let me take you down to the 1 hour time frame here. So if we pair these two up, right? So we're still looking for the third wave here. We're still looking for the primary degree wave 3. This means that this whole structure is still ongoing. Okay, and this will look like this. So up in 1, down in 2, 3, and down in 4. We're in the makings of the wave 4. I don't favor this this interpretation only because this wave 4, right, is not pairing up to this wave 2. Right, you can see this wave 4 is larger. This wave 4 is not. Doesn't look like it's pairing up to that wave 2 correction. Now, say for argument's sake, okay, this was the actual count. We want to see price action hold above 425.54. Okay, so just bear with me here because this is not the time to start asking, okay, so where's it gonna go? What's gonna happen? No, this is the time to sit back and let the price action develop. Because if we start trying to force levels, then it's gonna turn ugly. For now, we just want to have invalidations. We just want to see where possibilities are going to occur for invalidations. Okay, and then we take it from there. So the chart on the right will invalidate if 425 is broken, 425.54. That would mean that the chart on the left, our preferred interpretation, is still at play. If the chart on the left invalidates 443.22, then that will potentially signal that wave, that the chart on the right hand side is still at play. So you get where I'm going. This has been a tough market. This has been a tough wave count to get behind. Okay, so don't feel too lost. Again, join trending waves. We'll take care of you. We'll navigate the markets together. You know, we're not trying to shoot darts at a board blindly and hope for the best. We're actually taking this a day at a time and take this as a serious job that it is for us. All right. So again, if the chart on the right, on the left, my apologies, invalidates 443.22, then this probably still at play. But if this one invalidates 425.54, then that's it. This is what's at work, and we still gotta for the downside to go. All right, guys. So that's that. Let's take over and look at the Qs. Where are the Qs at? The Qs are in a similar situation. So you guys remember that a couple of days ago, I was talking about this chart heavily, right? I was talking about this chart being the one that is going to indicate whether we're in the top or not. So why I did that? Because from those September 1st high or September 2nd, we originated this trend line. And now we confirmed it on February the 16th when we did not break above it. Okay. And now we try to retest it again, this last new high, and we found resistance. And so the question is, did we reach the top here in the Qs also? Are we going to retest the bottom of this channel or this line? Or are we going to keep on bouncing and then potentially head on lower to the wave 2 in the primary degree? Okay, that is yet to be known. But hey, that's why we have the wave counts to work. So what we have here, guys, is that off the top, right, from the wave 5 of primary degree of 1, we sold off in wave 1. ABC pulled back into the wave 2. 618 retracement spot on. Acceleration gap down to the wave 3. 1618 support to the 200%, just like in the SPY. Okay. And now we want a 3-wave pullback to the upside to confirm this wave 4. If we invalidate, if we go above 370, 379, then this whole wave structure is invalid and we are still going to interpret the primary or the other interpretation, which I won't show. That's only for members only. If you want to see that chart, hop on into trending waves. So if we see this chart, if we see that this chart invalidate, then boom, there we go. So yeah, that's pretty much it. I mean, again, we're in the waiting game now. All right, we are just being patient and see what the market is going to transpire. If you want to go ahead and short this and short this chart, by all means. But what we're going to wait for is see if we invalidate any counts or any wave analysis before we take advantage to the downside. All right, guys. So that's it for me tonight. I hope that this was clear. Apologies I didn't bring out a video over the weekend or Friday. You know, was pretty busy with family events, but back on regular schedule. So let's see if we tomorrow we stay under 443 and we head on lower. If that's the case, we may short right towards the invalidation level to keep a tight stop and then have a potential reward of a lot of points there, if you can see. All right, guys. So take good care. See you guys tomorrow. Bye-bye.